Hello everyone, this is Darko 2012 with Global Government News. Hope everyone's having a wonderful new year in 2010. I'm covering what I guess is kind of a big story, although I'm kind of not really sitting back, but I'm waiting for more information to come out on it so I can get the bigger picture. But I know it has to do with this whole the whole bailout scam, which we all knew it wasn't like a bailout. At the time, it was a scam out. It was a banker scam, banker takeover, a heist, if you will, where Goldman Sachs, ex-Goldman Sachs head man, Hank Paulson, he worked for Goldman Sachs. He was one of their top dogs before he became Treasury Secretary. And the guy that handled the bailout itself, like as far as, who they said was going to be the right-hand man, was some nobody name. Well, not nobody. I'm sure he's got a good, record of what he does. But Kashkari, who was also a fellow or ex-Goldman Sachs employee that headed up the bailout. So, I know there's definitely there was something that didn't smell right, but with a lot of these things, you just have to let time pass, and then, the deeds that were done in darkness will come to light. And so I believe this is what the case is here with what's come to head as far as Timothy Geithner when he was at the Federal Reserve Bank of New York, and what he knew and what he didn't know and what he didn't do. So that's that's what I know as far as this whole story goes. But I'm going to go into it. I'm going to read it, and this little article. There's a couple videos down here. It's going to be a two-part video. So just stick with me here and check out the second video as well. It was written by Kurt Nimmo on January 13th, 2010. Earlier today, House Representative Edolphus Towns subpoenaed documents related to the so-called backdoor bailout of AIG, including documents from Timothy Geithner, the former New York Fed chief and current Treasury Secretary. The House Oversight and Government Reform Committee is looking for information on payments made to AIG counterparties, including Goldman Sachs, Morgan Stanley, Barclays, Bank of America, Deutsche Bank, and Societe Generale. The subpoena, quote, specifically requests all documents surrounding the decision to pay AIG's counterparties 100 cents on the dollar, according to AFP. It looks like Towns and his committee may only get part of the story. They will have to wait until 2018 to get the rest. In May, well before Geithner was on the hot seat, the Securities and Exchange Commission approved a request by AIG to keep secret an exhibit to a year-old regulatory filing that includes some of the details on the most criminal aspect of the AIG bailout, the funneling of billions of dollars to the above-mentioned culprits, particularly Goldman Sachs. The Securities and Exchange Commission said the exhibit, quote, qualifies as confidential commercial or financial information and is off limits to Congress and the American people. The 2018 expiration date will fall on the 10th anniversary of the Federal Reserve of New York's decision to provide, quote, emergency financing to an entity set up to specifically acquire some $60 billion in collateralized debt obligations from 16 banks in the United States and Europe.
The gentleman's expired. Senator Sanders.
Thank you, Mr. Chairman. Welcome, Mr. Chairman. We have spent a lot of time in Congress talking about the $700 billion TARP bailout, which I voted against as it happens. Not a whole lot has been talked about with regard to the $2.2 trillion that the Fed has lent out. Now, I find that absolutely extraordinary that I wrote you a letter and I said, hey, who'd you lend the money to? What were the terms of those loans? How can my constituents in Vermont get some of that money? Who makes the decisions? Do you guys sit around in a room? Do you make it? Are there conflicts of interest? So my question to you is, will you tell the American people to whom you lent $2.2 trillion of their dollars will you tell us who got that money and what the terms are of those agreements?
We explain each of our programs. In terms of the terms, we explain the terms exactly. We explain what the collateral requirements are. We explain what
To whom did you explain that?
It's on our website.
Yeah, okay.
So all that information is available in our commercial paper
And
program.
who got the money?
Hundreds and hundreds of banks. Any bank or that has access to the U.S. Federal Reserve's
Will you
discount.
tell us who they are?
No, because the reason that is counterproductive and will destroy the value of the program is that banks will not come to the business.
Isn't that too bad?
Sorry.
In other words, isn't that too bad? They took the money, but they don't want to be public about the fact that they received it. We heard a whole lot about AIG. They're on the front pages.
These are very
now, I got banks and I have businesses in the state of Vermont who are in a lot of trouble. Not banks. Our banks, by the way, are doing pretty well. Now, how do these guys who are honest business people get it? Do you have to be a large, greedy, reckless financial institution to apply for these monies?
There is no subsidy. There is no capital involved. There is no gift involved. It is a collateralized, short-term liquid loan that is both over-collateralized and is recourse to the company itself. We have never lost a penny doing it.
And how can other institutions get those loans as well?
According to the law, we are supposed to be lending to depository institutions.
Well, let me just say this, Mr. Chairman. I have a hard time understanding how you have put $2.2 trillion at risk without making those names available, those institutions public. And we're going to introduce legislation today, by the way, to demand that you do that. It is unacceptable to me that that goes on. Mr. Chairman, one of the one of the issues that bothers me very much is that for many, many years, some of us were concerned about deregulation. Some of us were very concerned about where the economy was going. We didn't hear much coming from the Bush administration, who told us over and over again that the fundamentals of the economy were sound. We didn't hear much from the Fed. Now, looking back, do you think that maybe there was a problem there, that you did not raise some alarms out there and said, we got a problem when trillions of dollars are being floated around the world in a deregulated, non-transparent way? When you heard people talking about the fundamentals of the economy being sound, how come you didn't raise an alarm?
Well, there was a massive credit crisis, and it's been true that our regulatory system and our financial supervisory system did not succeed in preventing those impacts. And I think it's very important that
Did not succeed in preventing them. Let's take it another way. Do you think that the repeal of Glass-Steagall was a tragic mistake?
No, I don't think so. But I do think we need to have much more effective holding company and oversight supervision, and I strongly support a strong program of regulatory reform going forward.
Mr. Chairman, in my state, people ask me how it could be that you're providing loans at almost zero interest rates to large financial institutions who are then charging consumers 25 or 30% interest rates on their credit cards. Do you think that that's acceptable, or do you think that those institutions that are receiving help from the Fed should substantially cut those interest rates?
Well, with respect to credit cards, we've been working actively in that area in a couple of dimensions. One is that credit card credit availability will be enhanced by our TALF program, which I've just announced.
But you're not answering my question. Should a financial institution that is being bailed out by taxpayers charge those taxpayers 25 or 30% interest rates when they're receiving?
Well, you need to address that to the Treasury, because it's the TARP that's providing help to failing or damaged firms. The Federal Reserve lends to healthy firms on a collateralized basis.
Last question. Last question. Many, again, of my constituents, and I think people all over this country, are wondering why the CEOs of these large financial institutions who have been extremely greedy, reckless, and maybe have engaged in illegal behavior have not been fired, so that we can work with people who want to really reform the system. Should the CEOs of the financial institutions that have led us into this deep, deep recession be fired?
Well, pay and job tenure should depend on performance, and those which have performed poorly should lose their jobs.
Are any of them who have been?
Many have lost their jobs.
Most of them, of the major guys, are still holding their positions.